So, all right, I can kick off now, right?
Yes,
Yes, you
yes.
can.
All right, good evening, guys. It's nice to have you here. My name is Everest, and I'm a crypto trader and also a financial trader, and also the trade analyst at Candleweb. I believe you all have knowledge of what Candleweb is and who we are, actually. And I'll be teaching you guys on the topic of today will be understanding crypto trading and trading style. I hope I'm audible enough.
Yes,
Yes, you
you're
are
audible.
audible.
All right, all right.
Guys, let it not be that it's just me and Isaac that is hearing Everest. Please, can you react or comment so that we know that you're hearing him? If you can hear him, please react or comment.
Isaac, I think I will need you to give few persons permission to be able to access your mic, just in case I ask questions.
Oh, okay. We're using the
I
chat
need to be a bit
function for the
interactive.
class. So if there's like any obstruction or they can't hear, they'll be dropping a message in the chat section and would notify you.
Okay, okay, that still works. That still works. I want it to be a bit interactive though, but yeah, that's fine. So, all right, let's start. Like I said, our topic for today will be understanding crypto trading and trading style, right? So, yeah, let's be real here. You've probably heard people say things like crypto is the future, or I made 10x on a coin last week. But at the same time, you've also heard stories of people losing everything overnight. So what's the truth actually? You know, the truth is crypto trading can be incredibly profitable, but also extremely risky. And the difference between winning and losing, it's not luck, it's knowledge. And I believe that's what you guys are here for. That's exactly why we are here today, actually, knowledge. To give you the knowledge and the tools you need to equip yourself to be profitable in the crypto market. I believe by the end of this session, you're going to understand how crypto trading works, different types of trading, right? Sorry, give me a minute. Okay, you're going to understand how crypto trading works, different types of trading, the different trading style, and most importantly, how to avoid blowing accounts. You know how it is when you blow your account. For just as a beginner to avoid some of those up and downs in the market. So wait, but now I have a question. How many of you have traded crypto before? And how many of you have actually made consistent profit from the crypto market?
How many have blown accounts?
How many have blown accounts? Good question.
I have blown account very well. I have blown account. Even me over here.
So my students, are they not saying anything? How many? How many? Or no, none of you guys have traded crypto before, aside Prof. David and Prof. Isaac.
Yeah, we have
Nobody
students in the
have
comments.
blown
Major
accounts.
Victor said he has blown account. Sufyan.
Interesting. That's
Sufyan have
you know
blown account. Isaac Daniel.
that's you know what that's part of trading. You know that's how you learn. You don't panic when you see a loss. You learn from it. You know you try to figure out what you did wrong and what you should do right next time. So that's part of trading, right? And it's okay if you haven't made profit yet. Don't worry, you are not alone. I've also blown accounts. Oh God, I've also blown accounts. In fact, my girlfriend left me because I lost my money. So that crypto made my
Amaka.
girlfriend
Amaka. Amaka.
exactly. Amaka disappointed me as usual. So today we're going to break everything down in a way that it's easy to understand, so you can trade smarter, not harder. I hope that sounds good, right? That's why we are here. We are here for you. We are here to help you make money in the crypto market. So moving forward, what is crypto trading, right? My slide says crypto trading involves buying and selling cryptocurrency to make profits. And you know the crypto market operates 24/7. The crypto market operates 24/7, not like the financial market, you know, that trades 24/5. The crypto market trades 24/7, Saturdays, Sundays included. Traders use different strategy based on market condition and goals. So crypto trading is just like buying and selling of, okay, let me use an example of, ladies that sell wigs. I believe there are some ladies here selling wigs. So crypto is more like buying and selling of, wigs, except instead of a physical item, you're trading digital coin, like your Bitcoin, Ethereum, Solana, Doge, etc. So crypto is just about online transactions, buying and selling. That has to do with supply and demand. So let me use this example. Imagine you buy an air for 200,000 naira, and a month later, people want that air, that particular kind of air, badly, and someone offers you 500,000 naira. You sell it and you make an extra 300,000 naira profit. So that's exactly what happens in crypto. Price goes up and down based on demand. And traders try to buy low and sell high. That's the idea. The difference, crypto moves much faster and often opens 24/7. There's no closing bell in the crypto market. Like I said before, unlike the stock market, there's no closing bell in the crypto market. I hope I'm not moving too fast. And I hope you guys have your pen and paper there with you.
Oh, no, you're not moving too fast.
All right. Thanks for that. So, like I said, okay, let me go. How the price move? How the price move? So, price in crypto change based on supply and demand. If everyone wants Bitcoin, for instance, the price skyrockets. If people start panic selling, I believe most of you know what's panic selling. Maybe something is happening, and just like what happened recently, the Bybit hack. Few people panic sold, people start selling, and if you realize at that point, Ethereum crashed down for a while because people were panicking. So if people panic sell, the market crashes. So it's based on simple supply and demand strategy, because I believe most of us did economics here in school. And also news events. What causes the panic sell in news events? I use the recent Bybit app as an example. And sometimes, if you notice, most of you that follow crypto, if you notice, sometimes if Elon Musk tweets about Dogecoin, boom, you see price jump. You hear things like, oh, okay, there was a time China banned Bitcoin, crashed. So stuff like that. And also market sentiment. We have the fear and greed that drives the market. Fear and greed actually drives the market. So yeah, those are the few things you really need to know while starting this class. So let's move forward to, we have two major trading types in the crypto market. two major trading types, which is we have the spot trading and we have the futures trading. All right? We have the spots, we have the future trading. Spot trading has to do with instant buying and selling. You buy or sell an asset immediately at the current market price. And when it comes to spot trading, you own the asset after buying it. You own the asset after buying it. It's straightforward. The idea of buying low and sell high happens a lot in spot trading. Because I gave an example here. For instance, you buy one Bitcoin at $40,000, for instance, in a spot market. If BTC price rises to $45,000 and you decide to sell it, you've made a profit of $5,000. If BTC drops to 35,000, you've made a loss of also $5,000 if you decide to sell. But if you decide to hold, good and fine. But we'll get there and you get to understand what I mean by holding. Okay, so let me use an example. So for instance, you go to, let me say, Nike store to buy a Nike for about maybe $200. Now you own that particular sneakers, right? And you can keep it, sell, or wear them. It's your choice. So if the price of that sneakers goes up to maybe $300 later on, and you decide to sell, you've made a profit of $100. And for instance, let's say the price of sneakers drops and you want to sell, you usually sell at a loss. But if you decide to hold and maybe wait for a better time where price might go higher before selling, then you're making profits. I don't know if you guys understand. Am I making it simple as possible?
Oh, yes, you are.
Yeah, doing good.
Okay. All right. All right. So basically, that's just how sports trading works. And when we come to futures trading, trading with contracts, not ownership. Spot trading has to do with ownership. You own that particular coin you're buying. But futures, it's more like you are betting. I won't call it betting, but it's more like you're betting. You trade with contracts. You don't own that particular asset. Am I audible? I think my network.
Yes, you're audible, Everest.
All right.
Yes,
All
you
right.
are.
All right. Okay. Okay. I think my network was fluctuating. I just got a warning. So yeah, you on futures trading, you don't own the assets. Instead, you trade the contracts and predict future price. You can either go long, which is you bet on price increase. You might bet on an asset, maybe like Bitcoin. You can bet on, okay, Bitcoin is going to buy, right? Bitcoin is going to get up from 40,000 to 45, right? You can bet on that price. If you bet on that price and Bitcoin goes up to 45,000, you're making a profit of $5,000. But if Bitcoin goes down after you predict that price is going up, you've lost that trade. And depending on the amount you bet with, you've lost. You lose money either way. It might be $1,000, depending on where your stop loss is and the amount you decide on on losing while taking that entry. And at the same time, you can also bet that, okay, Bitcoin is going to sell from 40,000 to 35,000. And if Bitcoin drops down to 35,000, you're in profit. It's unlike spot trading. This is where there might be a little confusion, right? Spot trading, you can only buy. You can only make profit from buying. While on futures, you can make profit from buying and selling depending on which you bet against. You can decide to, okay, price is going to move, like I used as an example, price is going to move from 40,000 to 45. If you bet that, okay, price is going to buy from 40 to 45,000. And if price buys to 45,000, you're in profit. And if you also bet price is going to sell from 40 to 35,000 and price sells to 35,000, you're also in profit, right? You're also in profit. Even if, as long as you're selling from 40,000, if price dropped to 39,000, you're in profit. If price dropped to 38,000, you're in profit. So as long as you're betting on sell. So let me use this example here. Okay, imagine you enter a Bitcoin future contract at 40,000 with a 10x leverage. There's what I call leverage in futures trading, right? For instance, let me elaborate more on this, how the leverage works. If you're trading with 10x leverage, it means, for instance, you put in $100. You fund $100 to your account to trade the futures market with. If you're trading with a 10x leverage, the exchange lend you an extra 900. That extra $900 that they are giving you, you won't see it. It's just a backup leverage. You won't see it. It's just from the back end, because they are just like a middleman between you and the market itself. So they are just backing your $100 up with that 900. So technically, you now have $1,000 to trade with. But on the front end, you are only seeing $100. I don't know if I'm making sense.
Yes, absolutely.
Am I audible? Okay,
Yes.
okay.
Yes, yes.
All right.
Guys, sorry, before you continue, guys, are you understanding what Everest is explaining? Just so we'll be sure we're on the same page. Awesome. Awesome. Sweet.
Okay, are you guys getting it?
Yes, yes. They say they are. Please
All right, all right.
go ahead.
So
Then
like
I
I was
think
saying,
Tosin said you should repeat something.
okay,
Tosin, please indicate what you need him to repeat or talk about again so that we'll let him know. But Everest, please carry on. I don't know, is it Tosin is a lady or a guy? But Tosin said you should repeat the last sentence you made,
okay,
the last thing you
okay,
said.
okay. Let me just go over it again. Okay, for instance, like I was saying, for instance, you're trading, you put in $100 to your Bybit account to trade the futures market with, right? You're putting in $100 and you need a leverage, because without that leverage, you won't make as much money as you're supposed to make, because to be honest, $100 is really, really, really very little to make good profits on the market, right? But this leverage supports that $100. So if you are using a 10x leverage, technically The exchange lends you $900 to trade with. $900, including your $100, making it $1,000. But you're not physically seeing that $900. It's on the back end. On the front end, you're only seeing the $100. But as you're using a leverage of 10x, technically, you have $1,000 to trade with. Right? And in such case, the risk has also increased. The risk has also increased. So if price goes up 10%, your trade is now worth 1,100, which is on your $100, you've made an extra $100, which is you've made 100% of your $100. Because of that leverage, because initially, if you're not using a leverage, that trade would have given you $10. But since you're using a leverage and the broker is backing you up, the exchange rather is backing you up, right, with 900 to increase your initial funds to $1,000, right? For if price goes up 10%, you're making extra $100 profit. Your money has doubled. But if price drops 10%, your trade is now worth $900 and you lose your entire $100. Accounts, bam, accounts are gone. Your girlfriend will leave you. That was what happened to me. So leverage is good. Leverage is good. There's a positive side of it, yes, because most times without this leverage, we may not be able to use some certain amount of funds to trade the market, right? We what do they call it again? Okay, let me just say we are not the big traders, right? We're just using little funds to trade the market. So without this leverage, right, won't be able to trade some certain amount, right? Some certain amount won't be able to trade on the markets. So this exchange and brokers are really giving us this leverage to back up our funds, right? So we can be able to trade the market. Else, maybe if you have $10, you may not be able to trade. If you have $20, you may not be able to trade. But they are using this leverage to help us, right? This leverage is just a means to help we, the retail traders. Yes, that's the word. To help we, the retail traders, to be able to trade this market. I don't know if I'm clear enough. I don't know if you guys understand leverage, what I mean by leverage right now.
Oh yeah.
Oh, yes,
All
we
right.
Yeah,
do.
I see they do.
All right. So like I was saying, you enter a Bitcoin futures contract at $40,000 with a 10x leverage. If BTC goes up to 41,000, your 10x leverage turns a $1,000 gain into $10,000. I don't know if you guys get what I'm trying to say here. Okay, since we're using the 10x leverage here, right? I made an example using $100. So since we're using $40,000, how much do you think a 10x leverage will be? Huh? Who can guess? Am I audible?
Yes. Yes, you're
Tosin
audible.
said, okay, from the comment section, we have some answers. Let me read them out for you. So, Farida said 400. Tosin said $1,000. Sufyan said $39,000. And Tosin 1,000 again. And T 1,000. Vincent 1,000.
Who said 400? Yeah, she's smart.
Let me see.
So basically, it's 40
400
times.
Farida.
Yeah, nice. She's correct. 40 times 10 will give you 400. So technically, what you're having in your account is $400,000. You're only seeing $40,000, but back end, it's $400,000. All right. They give you an extra $360,000, to back up your account since you're using an extra. So if you're making profits, if the market moves 10% up, you'll be making an extra $10,000 in profit. So which is your funds has increased, right, to $50,000. And if BTC drops to 39,000, your 10 times leverage turns your 1,000 loss into 10,000. So you now have $30,000 left. And if you are not careful, if you don't have a stop loss to protect your account, you get liquidated.
By liquidation, because you get sent to the village.
Exactly. You get sent to the village. Your girlfriend will leave you. See, Amaka will walk away. Amaka does not waste time. This is the moment where after losing your account, you hear a song like this. His word is not mine. So such song, that's when you hear songs like that. So you have to be careful while trading. All right. So I hope we're good there.
We are
So
perfect.
yeah, we're moving to key differences between sports and futures trading. These are the key differences. Ownership. In spot trading, you own your assets. You buy your BTC, you own your BTC. You know that, oh, I bought BTC. This is my BTC, right? Why price increase, you make profits. But why price decrease, you can lose, right? But the risk is not as high as futures. The risk is not as high as futures. So while losing, you can also decide to hold. Your intention is that, oh, BTC is going to get to some certain amount. So no matter how much it drops, you just hold, right? Hold. So BTC, you own your assets. Futures, just a contract, right? It's just a contract. Within a short time, you're out. Then risk on sports, we have lower risks, like I said. While on futures, there's higher risks based on the leverage. Based on the leverage. There are different type of leverage. There's 10 times, 20 times, 50 times. You just multiply the amount you have times the leverage, the amount on the leverage, whether 10 times, 20 times, can be 100 times 10, 100 times 20, 100 times 50, like that. You can. So on spot trading, there's no leverage. On futures, you can use leverage. See, 10 times, 50 times. Profit slash loss based on actual price change. Yeah, based on actual price change. That's how you lose money on spot trading. Why futures magnified due to leverage? You see the leverage? That is good when you're making profit using leverage. It's very, very good, very sweet. But when you are making loss, you know what market will do to you. So no expiration, long term, on spot trading is long term, right? Your contract does not expire. It's you bought the BTC, it's yours to hold. It depends on the amount you bought though. It's yours to hold. Then on futures, contract expires or close manually. When you hear close manually, either you close it, if your contract expires, account gone, rest in peace to the account, or you can decide to close manually. So yeah, that's how it works. I hope that's clear. And my guy
Oh
is
yeah.
sleeping. All right.
Oh yeah,
All right.
yeah, yeah. That's very clear. Guys, if you have any questions, please be sure to ask, and
Yeah, you
then
can ask if you have
we'll
any
start
question regarding
taking
that
note
before I
of
move
them.
to the next. Yeah.
Joseph said he's not very clear on the last thing. I think on the last slide. So if you could just maybe you want to run through it
On
fast
on
or
this
just
slide,
summarize it.
on this slide,
I
right?
I I think so. I think both Joseph, yes, he said yes. I think both Joseph
Okay.
and Farida, yeah, and Farida said they're not very clear on that.
Okay.
Please, if you're not clear on this slide, please indicate as well so we know
Indicate,
how many
indicate,
persons.
indicate, indicate, indicates. Okay, I can. Okay. Yeah. So what I'm trying to say here is that when it comes to spot trading, you own your assets, right? Which is if you buy BTC, Bitcoin worth $10, you own that BTC. Futures is more like you are betting. You are not actually buying BTC. You're not actually buying BTC. You are betting on Bitcoin. You are betting on. It's more like, okay, you go to a betting shop, you decide to bet on Manchester United. Manchester United is going to win, right? You bet on Manchester United is going to win. If Manchester United lose the match, you've lost your money, right? You've lost your money.
Right.
That's how it works. So for futures, you're betting on BTC, that BTC will buy. You can either bet that BTC will buy or BTC will sell. Two ways. Two ways. If you bet that BTC will buy and BTC sell, you lose. If you bet that BTC will sell and BTC buy, you've lost your money. I don't know if that aspect is clear. Before I move to the next, let me just take it one step at a time.
Yes, I think you're clear on that, Everest. I think you can move
Okay.
to the next.
Now,
Yes, you're clear.
when we talk of risk, on spot trading, the risk is low, very low risk, right? Why? Because you now own the assets. You now own those assets. So sometimes, regardless of how bad price drops, it all depends on you. If you decide to take, if you decide to take out your money, that's when you're at loss. But if you decide to still hold and markets end up recovering and moving above the price you bought from, for instance, let's say you bought from 40,000, right? Let's say you bought from 40,000. I used an example above. And let's say price moves to 41,000, right? Let's say price moves to 41,000. You've made profits. But okay, let's say you used $40 to buy BTC. at the price of 40,000, right? If price move from 40,000 to 41,000, your $40 is now $41. Am I making it simple or am I still making it difficult? So same way, if price drops from 40 to 39, your $40 become 40,000, sorry, to 39,000, your $40 become $39. So the risk is really, really low. It doesn't move as fast as futures. The futures are very high risk when it comes to trading due to the leverage, right? So you're making 10 times of your money if you are using a leverage of 10x, right? Every movement, every 10% movement give you 10 times, oh, sorry, 100% of your money, right? I don't know if I'm clear. So if due to the high risk, if it moves the opposite direction, you're also, the same way you're making large amounts, you're also losing very large amounts due to the leverage, right? I used an example. If you're entering with $100, right? You enter with $100 and you use a leverage of 10x. Technically, you're using $1,000 to enter that market. They are not seeing your $100. They are seeing your $100, $1,000 due to the leverage, right? And if price go up in value by 10%, you're making an extra $100. If price move up in value by 1%, you're making an extra $10 on your $100. But if price goes against you by 10%, you're losing your entire $100. If it goes against you by 1%, you're losing $10 out of your $100. So you have $90 left, technically. Is that clear?
Very, very.
Okay, so I've explained two things here, which is technically the sports, no leverage. Yes. Futures, you can use leverage. So that is clear, I believe. So sports move, I believe the first one I explained covers this. Sorry, the low risk covers based on actual price change, right? It moves based on actual price change. I believe the explanation I gave covered it. Then for futures, magnified due to leverage. That is also covered. So for BTC, no expiration, long term, right? What I mean, no expiration long term is based on, right, since you own the assets, since you particularly own this asset, like I say, for instance, you buy with $10, right? The the risk is really, really, really very low. So BTC has to, I think for you to lose that $10, for instance, BTC is $40, 40,000, right? For you to lose your $10, I think BTC has to drop 100%, if I'm not mistaken. So what happens on spot trading is that You just see your money keep reducing. If BTC keeps dropping, at some point, you might not even see your $10 gain. It might just be 0.00000. I don't know if I'm clear on that.
Yes, you're very clear on that. The
So
comments you can
that's how,
see. Oh,
yeah, so that's how it is on spot trading. While for futures, like I say, you are betting, you are betting. So your contract expires. Your contract expires, right? And what I mean by that is that, for instance, you take a buy position. I believe my explanation then should cover it. For instance, you take a buy position and the market goes against you, right? There's a very high possibility you are losing your money immediately. You are losing your money. It goes against you 10%, you're losing your $100 immediately, right? And that's how your contract ends with them. They have nothing to do with you anymore. You are back to the village. Or you can decide to close manually. Maybe price is going against you. You can decide to end your contract, close the trade, get off the market. Or you can have a stop loss. But we'll talk about that. Let me know move beyond that. I don't know if I'm clear on this. I want to be sure. I think 1 hour is almost done. Am I clear on
yeah,
this?
just go ahead. Yes.
Okay, so we'll move up to the next styles of trading. Right? So we have different styles of trading. We have the day trading, we have the swing trading, we have the scalping, and we have the HODLing. Right? So day trading, buying and selling of crypto within a single day. Example, a trader buys Bitcoin at 42,000 in the morning and sells at 42,500 in the afternoon for a quick profit. That's how day trading works. The thing is that on day trading, I believe this example explains it really well. So for instance, you get into the market in the morning, right? Maybe at then when you get into the market, price was 42,000, right? And maybe price dropped to maybe 42,500. You're still holding your trade. Still holding your trade because you have a target. While entering that market, you have a target that, okay, price is going to move to 42,500. And your take profits is at 42,500. Even if you don't set to take profits, in your mind, your take profit, you've decided that, oh, my take profits, I'm taking profit when price gets to 42,500, right? At the same time, after entering that trade at the price of 42,000, maybe within that period, 1, 2, 3 hours, 4 hours, price is just playing around 42,100, back down to 41,900, 41,800, 41,500. Price is just playing, and you decide, okay, I'm still holding. It has not gotten to my stop loss. Initially, maybe you have a stop loss of maybe 1:1. You're planning to make 42,500, and your stop loss is somewhere, and you're like, okay, if price gets to 41,500, I'm leaving this market, right? I'm leaving this market. So you will see all that trade. You will see all that trade if price does not get to 41,500. or 42,500, you will still hold that trade, right? And it also depends on how volatile the market is at that time. How volatile the market is at that particular time. So sometimes the market is just very slow to the point where you might hold that trade from maybe morning till in the evening. You might hold that trade for that long because day traders do hold trade like that. You might hold that trade for that long until either price get to hit your stop loss or get to hit your take profit, taking you out of that market with either a loss of $500 or profit of $500. So you don't just rush out and rush in. You hold trade for some hours when it comes to day trading. Within that single day, whether you're buying, whether you're selling, you hold you're good at holding trade for hours. Am I clear on that? I'm trying to make it as simple as possible
Oh,
so
yeah.
everyone will get it. Okay, we're moving down to
Yes,
swing
I believe
trading.
you are.
Okay, we're moving down to swing trading. All right. Swing trading has to do with holding position for several days. I can decide to hold my position for several days, for a week, for 2 weeks, for even a month when it comes to swing trading. You can hold a trade for a month. Maybe you are buying or selling and it has not gotten to the target price from your analysis and forecast, right? Maybe you forecast that, yeah, Ethereum is going to get, I use Ethereum as an example. Yeah, Ethereum is going to get from 2,800, right, to 3,200. If Ethereum gets to 3,200 before you exit the market, you sell and you take your profit, right? And sometimes this thing takes time. So you're not like day trader where, oh, you might decide to, okay, let me rush out. Because you're not, day trader, most times, do not aim for very high profits as much as swing traders. Swing traders aim for very high profits, right? So that's why they stay long in the market to get to that point. Until price get to that particular point where their take profit is, they hold that trade for a week, for 2 weeks, for 3 weeks, for a month. That's how swing traders operate. And when it comes to, I don't know if I'm clear on swing trading. Then okay, moving to scalping. So scalping is about making multiple small trades. You know, this kind of traders that they will just enter as they just see that it's showing blue, they are making profits, they exit the trade. They might just open multiple entries. When they see they're making profit, they close everything. So they don't even care. They might have $1,000 in their accounts and they might be making profit of maybe, they're making profit of maybe $3, $2, $4. Immediately they exit the market. They don't waste time. They don't waste time. They just make their quick profit, exit. Or when they see they're making little loss, they close. People are good at this and people have used scalping to really, really build their accounts. But scalping, scalping is also dangerous because some people are actually scared to stay in the market for long. So that's the reason they just scalp out. So they see as small as $10, take their profits, they sell. See as small as $5, they take their profits, they sell. Immediately price enter into profit for them, they exit. Or immediately they see, oh, they are losing, I'm losing $5, they close the trade. That's how scalpers operate. Then when it comes to HODLing, long-term investing, right? You get to see people like Warren Buffett. I believe most of you know Warren Buffett, right? Those are men that can hold trade, that can hold an asset for years. So holding a cryptocurrency for holding a cryptocurrency for months or years, expecting long-term growth. For instance, let's say, okay, someone bought Bitcoin at $1,000 in 2017 and held it until today. There are some people that have been holding Bitcoin way longer than that. You know how much they are worth now? Despite the market fluctuation, despite moving down, up, they hold their trade. They hold their trade. And most of these people trade sports. They are sports traders. Holders are sports traders. Then when it comes to day, swing, scalping, you can still do those on sports, but it's mainly done on futures. Am I clear? I don't know if I'm clear on this. I think, wow, time. Am I clear on this? Mr. Isaac, is there any question?
No questions at the moment. No questions at the
Okay,
moment. Everyone is
am I
following
audible
up.
enough?
Yes, you are very audible and clear.
All right, all right. Okay, so I'm moving on to the next. What is trading analysis? What is trading analysis? Right? Trading analysis help trader make informed decision by studying the market trends, price movements, and external factors affecting cryptocurrencies. Right? So as a trader, before you trade, you have to analyze the market, whether it's technical analysis, sentiment analysis, or fundamental analysis. You don't just go into the markets, you don't just open your charts or go into an exchange and just buy. Go into an exchange, you just buy without analyzing the market, without knowing, oh, if price is trying to fall or price is trying to rise. If you're buying in spot without knowing, oh, maybe at this moment price is trying to fall, and you want to enter at the wrong time, you'll be at loss. You'll be at loss, right? After some time, you'll be at loss. If you're trading the futures market, you don't just go into your chart and buy immediately. You can lose your money, right? So you have to analyze. That's where technical analysis comes in. Trading analysis, rather. That's where trading analysis comes in. You have to analyze the market without fundamental, technical, sentiment analysis. What is important, you do your analysis properly before entering into any market. Whether it's Bitcoin you're trading, Ethereum, Solana, Doge, and so forth. You have to analyze the market to know where price is getting to next and possibly where price might turn from. So we have the core component of analysis, which is the fundamental analysis, right? We have the fundamental analysis, evaluating the value of cryptocurrency based on real world factor. So key factors. technology behind the coin. For instance, Ethereum smart chain. Okay, why are you buying? Right? Why are you buying this coin? Is it based on the technology behind it? Do you see prospects that that coin might do well in the future? Do they ever have anything to back up their project with? Any utility to back up their project with? So there should be several key factors why you should decide to buy an asset. Which companies do these assets have partnership with? And what is the future of this asset? Right? When it comes to Bitcoin and other things, you get to see fundamental has to also do with news. Sometimes you get to realize that there's this CPI news that usually comes out that affect the BTC customer price index in the US. It also affects the BTC. Sometimes if the news is positive, you get to see BTC drop. If it's negative, you get to see BTC pump. News like CPI. So fundamental majorly has to do with news. Has to do with news. Right? That's why if you're a trader, you really have to go online and make research often to know what's going on. What's going on? What is the latest news going on the crypto market? Which big companies are buying? What is this major investor saying? Is he saying something positive about this asset I want to buy? Or are they saying something negative about this asset I want to buy? Right? Is there a news surrounding it? Is there a negative news? Like you get to see, I used Bybit, for instance. What happened? When this guy came out to say, oh, they lost 1 point something billion from the market. After that, what happened? The market reacted to that news because people panicked, sold their assets, and Ethereum dropped, right? That's where fundamental comes in, news. I don't know if I'm clear, if this fundamental analysis is clear enough. Hello, am I audible?
Yes, you are audible. Okay,
Okay,
somebody said no.
okay. So what exactly don't you understand? Okay, let me just go over
Okay,
it. Okay.
Joseph Elablatsi. Okay, can
Sorry?
you? Okay, Joseph Elab. Okay, Joseph, can you tell us what you don't understand?
So, basically, when you get fundamental, think about news. Any news regarding crypto markets, think about news. That's what's fundamental. Fundamental is attached to news, right? That's why most times you get to see traders focus on Bloomberg, right? Bloomberg talk mostly about stock markets, forex, financial markets, talks about the crypto market, a lot. So most times when you get to see your this major crypto news comes out, Bloomberg talks about it. You get to see it on several news sites online, right? Where they talk about, you can, Twitter is also a good place. You can get to see several crypto news that can affect a particular asset you're buying. So basically, when you get fundamental, you should know that, oh, they're talking about news. I don't know if I'm clear on that. I don't know if I'm clear on that. If I've made it as simple as possible. Can I get an answer on that?
Yes, you're making sense. You're making sense.
All right. All right. So I can move forward, right?
Yes,
Let me
yes.
Yeah, let's hurry up and round this up. So secondly, like I said, we have technical analysis.
Sorry, Everest. Ramachan, what you don't understand, right? Just put it down as a question so that when we're taking questions, you can ask your questions so we can move forward. Lectures, I don't stretch it out.
All right.
Everest,
It's
please, you can continue.
okay. Secondly, we have technical analysis. All right. Technical analysis has to do with using historical price and chart pattern to predict the future movements. So when I'm talking about technical analysis, I think there are some things I'm supposed to pull here. I think I'm supposed to use pictures. Gosh, I think of those pictures. Okay, let's just move. So when we talk about technical analysis, it's by, I believe some of you know how the charts look like, right? Let me see if I can, open my chart. But you got, okay, I think I'm sharing only, are you guys seeing the charts?
No, you're sharing only your slide.
Only my slide, right? Okay,
Yeah.
give me a minute. Okay, so can you guys see my chart right now? Can you guys see my charts?
Yes, Everest. We can't see the chat.
Okay, good. All right, good. So when we're talking about technical analysis is about analyzing historical price pattern to be able to predict what is going to happen in the future. Right? That's what we know as technical, because most times technical analysis is about, like I told you, historical price pattern. There are usually patterns that's happened before in the market that do occur again. You know, there's pattern like, okay, for instance, maybe something happened. Usually, okay, let me use this as an example. I believe you guys know what they call Bitcoin halving, right? Bitcoin halving that do occur every 4 years. So most times people have predicted that, okay, price usually move up during the period of halving or just after the halving. You get to see price pump, right? So we've all known that. And you get to see patterns on the chart that will tell you that, oh, price is going to go up because, okay, before price, the recent halving that happened, I think price was around, give me a minute, yeah, just this stuff. Okay, so price was playing around this area, right? Price was playing around this area. But I noticed something about the price. I noticed something about price that is giving a pattern, right? And there are different patterns in the in the charts. There are usually different patterns, right? So most times I and Sir David laugh about it when I start talking about it. We have the flag patterns, we have the double top, we have the double bottom. So they are just different price pattern. So so this is just a basic class, so I won't really go much into that. All right. I'm just trying to let you guys, to most of you that don't really know what the chart is like, I'm just trying to make you guys understand when they say historical price patterns, right? So these are patterns we've seen before that, oh, anytime this pattern occurs, price usually goes up. Maybe anytime there is a double bottom, price usually goes up, right? Anytime there's a double top, price usually comes down. Anytime there is a flat pattern, price usually goes up. You can see I'm marking, see, these are the tools I'm using to mark my charts to be able to point out possible place price might reject from. It might either reject upward or reject downward. You can see my recent analysis. Yeah, currently, price was actually consolidating before price broke below the support, right? In technical analysis, there's what they call support, there's what they call resistance. Resistance is the highest point the market has reached at a particular time, while support is the lowest point the market has reached at a particular time. That's all known as, that's the simple definition of support and resistance and support, rather. So I intentionally marked this out to know, okay, price has broken through below this support. What's going to happen next, right? I'm expecting price to maybe come back here because it usually happens. Okay, this is what I mean by double top, right? You see that price created a double top here, and what happened? It broke below. This is actually an M pattern. This is an M pattern. You can see it. M. Let me see if I can bring out my tool. Okay, let me see if I can bring out my tool. The arrow. Okay, let me use this one. So this is actually M pattern. You can see it. This is actually M pattern, right? So these are patterns that do occur in the market. Usually, we know that, okay, anytime I say double top, then most likely price might go down, which is an M pattern. Price might go down, break below the neckline. See, currently price has broken below the neckline. So what am I expecting next? I'm expecting price to come back to retest this support, right? To come back, retest this support, then break further down towards this direction, if not below it, towards 83,000, if not below, if price comes back to retest. But at the same time, price might retest here and break above 94,000, which is moving price back up. So I'm able to predict this based on historical pattern I've seen before. Anytime it happens like this is what happens, this is what happens. So that's what technical analysis is majorly about. I don't know if I'm clear on technical analysis. Let me go back to my slides. I think we're taking time already. Wow. So am I clear on technical analysis? The key tools we have the candlestick charts, right? This, let me zoom in. This is known as the candlestick charts, right? These are the candles. This red stuff you see here is called the candles. The ash you see here is also called the candle. The ash color stands for my bullish candle, while the red stands for my bearish candle, which is if price is going up, which is if the market is buying, you get to see my ash candlesticks. Those indicate that, oh, price is going up. Price is going up at this time. My ash candlestick stands for, those are my bullish candle, which indicates that price is going up. When it's red, they show you say market don't red, you don't red. It's selling. That's if I'm buying and it's selling, it don't red. I'm losing. So my red candlestick for sell usually stands for, you know what red stands for. But if you're selling and the market is going down, then yeah, red is good. But if you are buying and the market is going down, red is bad. So this is what you call candlesticks. Man, I'm sorry I'm taking you guys time. That's how, you know, yeah, this takes a lot of time, to be honest. Then we have what we call indicators, right? We have the RSI, we have the MACD, we have the moving averages. These indicators are tools that help you identify trends. I think, let me go back to the charts. These are tools that help you identify trend. This is an indicator. This blue line you see here, this blue stuff you see here, right? It's known as an indicator. It's known as a moving average indicator. You see it here? It's called the simple moving average indicator, SMA. This is my 200 moving average indicator. This indicator now is telling me that, oh, price is still bullish. As much as I see price coming down, right? On a bigger scale, price is still looking bullish. I shouldn't be looking to short yet. That's what my indicator is telling me right now. Price is still bullish because price is still above my 200. You can see on my weekly time frame, we have various time frame. Man, see, like I said, this is just a basic. So there are so many things I can't really cover here, but I'll do my best to make you guys understand. So this is my weekly time frame. My weekly time frame tells me that each of these candles take a week for each of them to close. That's what my weekly time frame stands for. Each of these candles takes a week for each of them to close. And see, I'm trying to explain indicators, so let me not go to the other one yet. So this is my 200 moving average, still telling me that, oh, price is still bullish. On weekly, price still look very, very much bullish, right? Because price is still above my 200. On daily, it still look bullish. Price is above my 200, right? It still look bullish. There's still a high percentage that price might still buy, right? That is what it's telling me, right? There's still a high chance that price might still decide to go up, regardless of the fact that, yeah, we're seeing a downtrend right now. But I see a high chance that if price doesn't break below my 200, it's going up. And this 200 moving average gets rejected, it's going up. And this is the RSI, the relative strength index. It's known as the relative strength index. It's also an indicator that will help you also analyze the market. So currently now, price is telling me that, oh, it's been oversold on my daily. We are an oversold region, right? It's telling me, oh, price is oversold. So right now for me, it's not a good time to buy. It's not a good time to sell rather, because price has already oversold. Why would I want to sell when price is on oversold region? I can't sell now. I'll just have to be patient. I can't sell now because price has already oversold. It's very risky. There's a high chance that if I still decide to sell at this point, price might decide to go up to buy, and I'm losing my money. So this indicator just help you. This indicator just helps you, give you a supporting hand towards analyzing the market, basically. I spoke to you guys about support and resistance, key price levels where buying and selling pressure take place, right? On a resistance level, there's actually selling pressure take place around resistance level, while on a support level, buying pressure take place on support levels. Then we have I'm just trying to wrap it up on time. I think I've taken a lot of time. Sorry, guys. Then we have the sentiment analysis, right? Sentiment analysis, which is assessing market mood through news. It also has to do with news, social media, traders' behavior, right? Key factors on sentiment analysis: fear and greed index, right? You know, there's something they call fear and greed index. If you go to CoinMarketCap, you get to see it, right? which measure the market emotions. This measures the market emotions. You know, people usually panic. I use the Bybit stuff for an example, where, oh, sorry, excuse me. I use the Bybit stuff for an example where they lost 1 point something billion, and you get to see people, the panic sell. People start to panic, fear what's going on in the market. Something might just happen. Maybe one large corporation might just withdraw their sell their assets, right? Large corporation might just sell their assets, and you might just see the news and you see people start, oh, what's happening? Why did these people decide to sell their assets? I think Bitcoin is trying to drop. You get to see people start taking out their money because they don't want to lose, right, from the profit they've already made. Or the ones that is making loss, they don't want to blow their accounts. They don't want to lose more. So people will start running out of the market, right? We have the news and the tweets. If you go on Twitter, you get to see many things about crypto, right? People talking this, people saying that. There are just so many things happening on Twitter. If a lot of people, if there's panic, you get to see it on Twitter. So many people will be talking about, oh, I'm selling my assets, I'm doing this, I'm doing that. So you get to see these little things affect the market. That's what we call sentiment analysis. You know, there are community discussions, there are important communities in the crypto market. Like I say, from Reddit, Twitter. Twitter is also forums like that, where you get to see people talk about, oh, what's going on? I noticed this, I noticed that, I'm trying to sell. You get to see most people talking about selling, and you get to see market react to these things. Like, okay, there's an example here when it comes to Dogecoin. A tweet from Elon Musk about Dogecoin led to massive price surge. It happens, Elon Musk might just come out on Twitter and just type something, hello Doge. That's how, and you see, oh, people start buying Doge, you see price of Doge start going up. Come on. That's how it happens. And he might just decide to, okay, there was a time where it says no longer accepting Doge for Tesla. Because usually before, I think there was a time it was accepting Doge as payments for Tesla, for his Tesla cars. Doge price had to go up. There was a time he decided, oh, he's no longer accepting Doge as payments for Tesla and stuff like that. Price dropped. Right? Price of Doge dropped. So because people are trying to take out their money from Doge. So yeah, that's how that works. So, okay, I think that's all. So basically, yeah, I still have a few things to say. So one thing about trading, one thing you guys have to understand about trading, there's a lot of emotions that comes with trading. A lot of emotions. There's what is called risk and psychology. That's why we have the risk management when it comes to trading. Protect your money, right? Protect your money. You have to understand risk management when it comes to it's very, very important to understand risk management when it comes to trading. Protect your money. If you're trading, never risk more than 1 to 2% of your account on a single trade. Never risk. For instance, you're entering the market with maybe $1,000, right? And you want to take a trade. From that $1,000, you should at least maybe risk $10. You say, okay, if price gets to if I'm losing $10, if I lose $10 out of my $1,000, I'm exiting this market, then wait for another opportunity. Or you decide to risk 2%, which is you risking $20. You say, okay, if I lose $20 from this particular trade I'm taking, I'm exiting the market and I'm resting for the day. I'm not taking any other trade. I'll just analyze the market and wait for an opportunity tomorrow or maybe next week. So you have to be risk cautious when it comes to trading. You have to be risk cautious. And these are the things we put in you know, on Candleweb, where we our AI model does not risk more than 1% of a user's account. And trading is so difficult to the point that I don't trade anymore, to be honest. I analyze the market for fun to know, okay, what's going on, what's happening, because I drop signals for people and all that. sometimes I might be doing something else. I might be busy with other business. I need to make money, right? I need to make money. So my money is on Candleweb. If I have Candleweb and I have an AI trading for me, why would I want to stress myself? I analyze the market for fun. I can also decide to trade for fun when I'm free, right? But while I'm sleeping, I want to make sure I'm making money while I'm sleeping. While I'm doing other businesses and not on my computer trading, I know I'm somewhere, there's something making money for me somewhere. And the risk is assured. I confidently put my money there, right? I have $1,000 and it's there, and I know that, oh, even if it doesn't matter, even if markets, no matter how bad market is, I'm not going to lose more than 1% of my account. No matter how bad market is in the day, I'm not going to lose more than 1%, right? And it's been, man, sweet so far. They've just been profit making so far, because the honest truth, you see, most of this thing I taught you guys about technical analysis, sentiment, fundamental analysis. This is what an AI model helps you do. This is what the AI model does for you. You really don't have to do anything yourself. It takes care of the fundamental, it takes care of the technical, it takes care of the sentiment analysis, right? So it's just an easy free access. So because it takes a lot to trade the market, it takes a lot, and people have busy schedule. I'm not always in front of my computer, right? And I need to make money, right? And there are so many people that have been making losses, right? If there's a means for you to reduce your losses, come on, take the chance, right? Take the chance. That's what Candleweb is doing for you. Reduce your risk. It reduces your risk for you. You don't need to stress when it comes to psychology, trading psychology, mastering your mind. Because one thing about trading is that you really, really need to understand. There's what I call FOMO when it comes to psychology, fear of missing out. Where people get to see that, um, oh, price is going up, price is moving up. I want to buy. Let me just rush in. You see where price is currently? Let me share. You see where price is currently. There are some people that rush in at this point, right? Oh, that BTC is $106. BTC is going to $150. Let me buy. They bought here, right? And price decided to drop down here, and Amaka left. Who are you going to blame? Is it Amaka or you? You decided to buy here, and price drop. So people do FOMO in, right? And the honest truth, if you want Amaka to stay and not leave, just make things easy for yourself, right? Make things easy for yourself. There are tools that make things easy, because thank God for artificial intelligence, man. Most things have become quite easy for people. Things have become quite easy for people. So before I do sit down in front of the computer, sometimes I want to go out, go and chill. Now they be now, at least carry babe come out, go and relax somewhere. But you see me in front of the computer, front of the computer, after all the hustle, I block accounts. She still left, right? We didn't go out, she left.
Uh,
That was 2-0
this
for
this
me.
thing really pain you.
This is
My brother is
This
this is a real life story.
So yeah, we try to make things easy, because to be honest, trading, most especially when you're working, because I believe some of you are working and you're really interested in trading, on this trading thing. Things have become easy, where I get to do things for you. You can just, because there's nothing more interesting than sitting down and making money. You're not doing anything. You can be chilling, go for weekend getaways while you're still making money. Because like I said, the market is running 24/7, unlike the stock market. That's 24/5. The market is 24/7, right? The crypto market. So while you're on your weekend getaway, you're still making money. While you're spending on that babe, you're still making money, right? You're still making money. So yeah, I won't. I think yeah, our time has gone. Sorry guys, sorry guys. So I think I'll just end it here, and wait for questions. Wait for
Thank you
questions
so
because there's a
much.
lot to say. There's a lot to say. So, but time won't permit us, so I'll just end it here.
Thank you so much for that, Everest. So it was a wonderful lecture. I think from the amount of questions that I'm seeing in the chat, it shows that you did unpack a lot of knowledge today. Thanks so much for this. It's good having you
Yeah.
on this call. So I think I'm just, for those that have questions, you guys know the tradition, right? So just raise your hands, and then I'll unmute you so that you can ask your questions. But one of the questions that we have here, I think about 3 to 4 persons already asked these questions is, a lot of people are asking is, how um, how can they use Candleweb AI to trade? How does it work? Like, what do they have to do? I think they want to understand if they have to do any analysis or it's just automatic and all of that stuff. So that's one question I noticed they've been asking here, but let's not
Okay.
go into that. Yeah, let me
Okay.
unmute Ramachan first. Maybe you answer that question last, or if any of them should ask the question, then you can go ahead and answer
Sorry, is Ramachan an Indian
Good evening,
or
sir.
Chinese?
It's Japanese.
it.
Arabic mixed with Japanese. It's just a nickname.
All right.
Yes, good
Okay.
evening.
I like I
Thank you,
like it.
sir.
Okay. You're
Thank you,
welcome.
sir Everest. Sorry for the knowledge. Like, I really learned a lot, a lot, a lot. Like, I didn't even know
Okay.
all this
Appreciate
stuff. Yes.
it. Yeah.
So my
Oh.
first question is on the scalping. I didn't really get the scalping. Is it
Okay.
scalping you mentioned? Yes.
Yeah,
Then
scalping.
I don't know. An example of it, is it, what if I buy like different coins? Can I call that scalping?
You buy different points. You mean at
Yes, like
different
let's
points?
say I have
You mean at
Solana,
different points? Okay. Okay.
yes, at Solana, Doge, Bitcoin at the same time. Like, I bought like 4 to 5 coins and watching it at that period. Can I call that scalping?
No, that's totally different way, and I believe you can do that on only sports.
I
You
can
can
do
do that
that
on.
on.
You can buy several coin on only sports,
Okay,
right?
on what? Okay.
Yes, on only sports because managing several trade at the same time, right?
Mm-hmm.
Sometimes it's difficult, right? I don't advise it on futures. If you're
Okay.
trading one pair, stick to one pair. If you're trading futures, stick to one pair so you can be able to monitor the chart and monitor your trade because you can't be switching from charts to charts to chart to monitor what's going on. It's quite
Okay.
a difficult task to do. So
Okay.
I don't really advise trading like that on futures. You can buy different coin on spot
Okay.
and hold. Scalping. Scalping does not really work well because it's very little, does not work well on spot. Very, very tiny profit you make from it. So
Oh,
yeah, but you can also do that. You can just buy several on spot. But like I said,
mm,
low risk. It's low risk when you're trading spots, which means your profit is not, but you will not make as high as you're making on futures, right?
okay.
You not make as high. So it's just step by step, and it depends on the amount you're trading with on spots.
Okay.
Yeah.
I have one
I,
more question, sorry. I
right.
don't I didn't understand support and resistance.
And
And you
resistance.
yes,
Okay.
and you mentioned indicators, those I don't know tools, is it RSI? Sorry,
Yeah,
what
those
are
are
the full meaning of them? The
okay. I
RSI
told you
and is it
MACD,
MACD? MACD.
MACD, okay,
Yes.
RSI is called relative strength index.
Relative. Okay.
Relative strength index.
Index.
MACD is
Okay.
called moving average convergence divergence.
Okay.
moving average, convergence, divergence.
Okay.
Yeah, the
Okay.
moving
Thank you,
average.
sir.
So there are several tools. I think Mr. Dave will be having I think a proper class soon, right? I don't really know about that, but I can't take all of that now on this basic because there's a lot when it comes to technical analysis that you
Okay.
can't really get now, right? You can't really get everything now. So
Okay.
maybe when the time comes when we're having the class, then I believe I'll be able to take all that. Mr. Dave, am I right or wrong?
Yes, yes, you're absolutely right. We're going to be having an advanced uh, class for this, an advanced course for this course very soon. So during those ones, we're going to go a lot more deeper into some of the subjects.
Yeah, then I can be able to elaborate. I'll teach you how to use the chart. I'll draw lines, teach you how to do analysis basically on your own. Yeah, we'll do all that.
Okay. Thank
I'll
you
teach you
very
how
much.
to use all the indicators. Yeah,
Okay. Thank you,
you're
sir.
welcome. You're welcome.
All right. We have Jamesy. Jamesy has a question. Isaac, please unmute Jamesy. So,
James Bond.
well, who knows? Maybe that's the application for James Bond. But yeah, Isaac, please unmute Jamesy so you can ask the question.
James
Hello, good evening.
James U07. Good evening. How you doing?
Hello,
Jamesy,
can you all hear me?
Yeah, you're audible. Okay.
yes, you're very audible.
The name is James, not James Bond. Uh,
Right.
so my question is, when doing technical analysis, do we
Mm.
depend on it in everything, like in all the analysis? Because
In
we've
all the
seen how, sir,
okay, carry on.
we've seen how BTC just dropped from being around 100 to 85 today, and from the indication, from the analysis being there, it's not supposed to be so, but everything just crashed down, making people to lose their money. So
Mm.
I don't know the factors that we need to check in for futures trade, because while doing your analysis for futures trade, you hardly check all those stuffs. Maybe when you're doing for spot trading, then you'll be able to check the news and all those stuff, so that you'll be able to scale your way
No,
through.
yeah, I get your question. Your question is very clear. Do you know the mistake most people make?
No,
Like
so
I told you before, most people just go into the futures markets, they just do their thing and they just start trading, right?
yeah,
It's good to analyze the market before time. Make your
okay,
research. You know that, oh, I'm going in to trade today, right? Sometimes I
that's
get up as early as, sometimes I do my analysis at night, waiting for the next day, right?
true.
Waiting for the next day. Or I wake up very early, sometimes at 5 a.m. I know what I want to trade because I've already do some analysis the previous day. I've already predicted some places where, okay, when market gets here, this is what I should do. So I wake up early, okay, see if price has gotten to that particular place, still do my further analysis to know, okay, what am I expecting price to do today? Where is price going to retest? What am I going to do before I enter into this trade? You need to, sometimes you really need to have a journal where you write down what do I usually see before this happens? What do I usually see before market pumps? What do I usually see before market dumps? So those are the basic things. You get to check your fundamental, you get to check sentiment, go on Twitter, check, know what's happening before you trade a particular pair. You have to do all those research. You can't just depend on technical analysis. People do depend on technical analysis. It works. Technical analysis works 100%. But it's important you also try to know what's happening because fundamental, anything can just happen at a time. You might just be trading. You have no idea that one big man somewhere just want to suffer you, right? One big man somewhere just want to suffer you. Just withdraw how much from whatever coin you're trading, and you get to see the market just drop all of a sudden. Not because your technical analysis is not correct. That's fundamental effect of the market, right? That's why also you have to use risk management. That's where risk management comes in, right? That's where risk management comes in. You have to make sure that if you're going in with $1,000, you have to make sure that you've already settled within yourself. If I'm trading and I'm trading with $1,000, right? And I take an entry, I've already set my mind. I have my stop loss set that in this particular trade, I want to risk 5%. With my $1,000, I want to risk 5%, which is around $50. Right? I've already taken it in my mind that, oh, I have $950 left. Whether I lose the trade or I make profit, I already have it in my mind that right now is only $950. So in case that trade goes against me and I'm having only $950 left, I won't feel bad. It won't play with my emotion. Because most people, when their emotions get played at, they tend to revenge trade. What I mean by revenge trade is that you want to go back in immediately and want to make your money back. And that's when the market will tell you that the market will tell you something very, very bad. The market will take you back to the village. So yeah, you have to be careful. You have to do your analysis ahead of time, you know. And very important, you don't just use only technical, you also use your fundamental. Because first thing I do every morning, first thing is to check my fundamental. Check news, go on Twitter, what's happening, right? Go on several news outlets. There are Bloomberg, several news outlets where they talk about business, finance, crypto, and all that. Go check what's going on, what's the news for today, and all that. Yeah, before coming back to do your technical analysis, and yeah, move on from there. I believe this has already answered the question. Am I clear enough?
Awesome. Yeah, Everest. I think that answered the question. So we're going to take another person's question. I see Ramachan, are you asking another question or this is your hand being up from the previous one? So I think we're going to take Usman's question. So Isaac, please unmute Usman so that Usman asks his question.
Yeah,
So
Usman, you can
Ramachan, you said
unmute yourself.
Ramachan says it's a new question. The yes, is it that is a new question or from the old question?
Usman, please unmute yourself. You have permission to.
All right. Isaac, please
I'll be
unmute.
to Farida then.
Oh, awesome. Awesome.
All right, Farida, you can unmute yourself. Usman didn't unmute himself. So Farida, you can unmute yourself and speak.
Am I audible?
Yes,
Very
you're
audible.
audible.
Okay. Good evening, sir. I have a question about that leverage he mentioned on spot trading. Does that mean that the leverage work in 100%? Because he said when you put, let's say you invest $10, it multiplies like by 100, or am I not getting it? Like the profit you make is like times 100. Oh?
Awesome. Everest, you got the question. Isaac, is Everest muted?
Let me check. Okay, I don't think. Okay, I can see him. He got muted.
Isaac. Isaac,
Yeah,
you want to get
welcome
arrested.
back, Everest.
I got muted. You want to get arrested.
Yeah.
All right.
If you mute
Who did
your
I get a
mic, the
question from?
permission vanishes.
Farida, right?
Yes.
That question was from Farida. All right,
Yes.
Farida, how the leverage works is that if you're using a 10x leverage, like I explained, right?
Yes.
depending what amounts. Okay, for instance, I use an example. For instance, you're having $100, right? And you're using a 10x leverage. Sorry, excuse. And you're using a 10x leverage. 100 times 10 is what?
1,000.
Right? So
Yes.
technically, if you're using a 10x leverage, you have $1,000 to work with, to trade with on that account. You have $1,000 to trade with on that account, right?
Yes, sir.
Exactly. So on that $1,000, so technically now you're not having $100 anymore. You're not having $1,000. So if price moves 10%, if price moves up 10%, right? Which
Yes.
is, let's say price moved from 40,000, 10% of 40,000 is how much?
10% of 40,000. It's 0 point something.
No, 10% of 40,000 is around 4,000, right? If I'm not
Yes.
mistaken. Yes.
10 over.
If price moves 10%, right? Technically, you've made a profit of $100 on that 1,000. So you're now having 1,100. So technically, your initial $100, you've now doubled it. And you're able to do that because of the leverage. Because initially, without that leverage, you wouldn't be able to trade that high without, I don't know if you get me. You won't be able to trade that high without, so that leverage is just a form, or it's just something to back your funds up, to give you an extra edge, to have, like, you have extra money. And like I told you, the leverage is not visible, right? The
Okay.
leverage is not visible. It's not something you see. From the front end, you're seeing your $100, but they are backing you up. Since you're using a 10x leverage, the exchange is backing you up with an extra $900 to make your $100 $1,000.
Yes.
So if price gets moved 10%, instead of you now making $10, if you're using just $100 and price moves 10%, you'll be making only $10 as profit. Right?
10.
But because of you're using a leverage, you're using that 10x leverage to back your fund up. Technically now you have $1,000. So now if price gets to move, if price gets to move 10%, instead of making $10, you're not making $100 because of that leverage.
Okay.
Is it simple enough?
Yes, sir.
These are things I will explain further I'll teach you guys how to calculate leverage and all that.
Okay, sir. Thank you, sir.
Yeah. You're welcome.
All right. That's awesome. That's awesome. Everest, please, can you answer the question of how okay, I think Joseph is asking a question. Isaac, please unmute Joseph. I think that's Joseph's question. I don't think. Please unmute Joseph.
Yeah, Joseph, you have permission to speak.
Hello, good evening. Can you hear me?
Yeah.
Joseph.
Okay, so I have two questions, but I think I can't remember the name of the person he has. He have already asked the question. So the other one happened, I think during the I connected my Binance account with my Telegram business. So they transfer everything, they airdrop to my wallet address. It's happened after some months ago. I later check, and the hamster airdrop was not there. I don't know what happened. I just want a clarity. Maybe is it like somebody was telling me that maybe the Binance people have removed it from the market, and I don't know. So I maybe it might not be the same with what we just studied, but I just want a clarity so that at least to have a no more knowledge about that. That's it.
Well, your
So
question is not really
If
clear
you
enough, but I
so
understand
don't
the
understand.
question.
Do you understand?
yeah,
Hello. So
Joseph,
is my question
right?
clear?
Yes, your
Okay.
question is very clear, but it's not something that we can really comment on, considering that we do not know how Binance carry out such operations, and it's kind of not within the scope of this
Yeah,
particular
that's
topic.
it.
I think.
That's it. It's not. Yes, I just want a clarity about it because I was one of my friends was saying that maybe the Binance people have removed from the market, but I checked the Hamster is still on the market trading, but the one that I have before in my account it just disappeared. I don't know what's the problem, but some of my crypto that I was able to bought from with my money. So it's still there. But that hamster, I don't know what happened. So I don't know if there's any clarity. Maybe somebody have idea
Well,
so that I will.
my guess is maybe from the price. It had dropped a lot from the price they released it on, right?
Oh,
And maybe you
okay.
didn't have enough. So I guess maybe it's just under zeros, right?
Okay.
So that's why you're
Okay.
not saying it.
Okay. No problem. Okay.
Yeah.
Thank you, sir. That's all.
Yeah.
Thank you.
Well, I
Everest,
think
if you can please answer the other question of how the AI on Candleweb works. And I think we'll just take one last question and then we'll end the class so it doesn't become
sorry, I
unnecessarily
didn't get that.
long.
How sorry?
I said, I said if you can take the question on how they can use Candleweb and how the
Okay.
AI works. Yeah, that's relative to they doing the whole thing manually and all of that.
Oh, okay. I think I'll leave that question to you, Mr. Dave. Right? I think I'll leave that question to you.
Oh no, no,
Just
no, please you can go ahead and take the question.
oh, okay,
It's
that's
your
fine.
class.
All right. So yeah, it's very easy. I believe you guys have the link already, right? I believe you guys
Yes,
have the link
a lot of
already,
people already have an account. Yeah, a
and
lot
you
of people
already
already
have
have
an
an account.
account, right? Okay. So it's very easy. All you need to do is next is connect your exchange, right? It's very easy to connect your exchange, and I think we have videos for that, right? That can actually navigate you through how to do all that. And if you're not able to do it, we have support that will walk you through the process of connecting your exchanges, right? To Candleweb. Currently, if you have a Bybit and Binance exchange, you can connect it to Candleweb because those are the exchanges we work with currently, right? You can connect it. It's very easy step. Once it's connected, the rest just have your funds on your Binance. We don't hold your funds. Candleweb does not keep your funds. The fund is with you on your Binance. All you need to do is just to subscribe, buy units, and nothing else. You don't really know technical analysis, nothing else. Just connect your wallet, pay for units, have your USDT on either your Binance and your Bybit. And when you're on Candleweb, just allow the AI do the rest for you, right? Just create a trade. And it's very easy to create a trade on the Candleweb platform. That's very easy. After creating a trade with whatever amount you want to trade with, which is on your either Bybit or Binance, just create a trade and yeah, the AI because I think the minimum Candleweb trade with is $100, right? So you have to have at least $100 on your Binance and Bybit for the model to trade for you. So when you have such amounts there, you come to Candleweb, you create a trade. What's that $100? And yeah, leave the rest for the model. You don't do any technical analysis, you don't do any fundamental analysis. The model does everything for you. All you just need to do is to monitor your profits, either on the platform or on your Binance or Bybit. So it's just very, very easy.
Awesome. Awesome.
I don't know if
Thank
I'm
you for
clear
that,
enough.
Everest. Yes, Everest, you did a great job explaining that. Um, just to add to what Everest said, the idea basically around Candleweb is for us to be able to help you automate your entire trading process in a way that is profitable for you. For those that have traded before, that have blown accounts, I'm sure that most of the times that you blow an account, the major reason is because of emotional trading, right? And several times you'll be told as a trader that you need to get rid of your emotions and all of that stuff. But it's easier said than done. And that's because of the simple fact that humans, we are beings of emotions. So it's hard for you to not kind of respond to the emotional pull of the moment, right? And all of those. So what Candleweb does basically is we use the our AI system to eliminate emotional trading, and then we're able to trade for you using AI systems with data, right? Not emotion, not bias or anything. And the way it works, just as Everest mentioned, you don't have to conduct technical, fundamental, or even sentiment analysis. In fact, the AI does everything for you, even down to things like taking your profit for you. That is separating your profit from your capital and all of those things. And more importantly, it also manages your risk, because risk management is very, very crucial. Without risk management, it doesn't matter if you're trading automatically or manually, you're going to lose your money at some point. So the AI does everything for you. So yeah, that's that about that. Isaac, please, if you can unmute Ramachan so we can take her last question, and then that would call it a day for today's lecture. And then, guys, thank you so much. I've been seeing you guys feedback on the posts. It's wonderful. Please remember to also repost and like as well, so more persons will get to see this. Thank you guys so much. Now, Isaac, please unmute Ramachan so she can ask her question. I don't know if she still has a question.
I've unmuted Ramachan. She has access to speak.
All right, awesome.
I don't think she's
So,
still
Ramachan,
here.
what's your question? Okay, she's probably having network problem then. All right then. Has everyone filled out the attendance? The attendance sheet is still going to be on your tax page from now till tomorrow, 6 p.m. Right? And also we're also looking at making your sadat for those who get an attendance of 70 to 80%. We're also looking at having your results, that's your certificate, on Candleweb website, whereby it can be easily verifiable. So if you're applying for a job and let's say your employer wants to confirm, you can have your link on your CV, and then they click it, and then it takes them to Candleweb to show that you are not forging or just making false claims and all of that. And also, um, by completing some of the tax that you'll be seeing on your tax page, we're also offering points and then AI units. The points eventually, it might be an airdrop, maybe much later in the future or sometime in the future when we're going to be having our own native token. Could be on Solana. And then also, you'd also be getting AI units like today's attendance. I think they come with 2 AI units. And I think Everest mentioned a little bit about that. The AI unit is what allows our AI system to be able to trade for you. So with 2 AI units, our AI system will be able to place about 2 trades for you for free based on that AI unit that you're getting. So I think from tomorrow, you can start claiming those. Nicholas, Isaac, please unmute from my chance. She's back. Then Nicholas, you have to create an account on Candleweb. That's where the attendance sheet is on the tax page. Anyone who has created that already, you can share your referral link. Is it Nicodemus? Okay, Nicodemus, not Nicholas. You can share your link with Nicodemus so he can create his own account. Yeah, when Nicodemus subscribes, you get referral bonus and all of that. Ramachan, please go ahead.
Okay, thank you very much, sir. Mr. Everest, you mentioned something when James asked a question concerning news. I see bubble. So I wanted to know like places we can be able to get like the latest news on what is going on concerning the crypto. I think you mentioned, is it bubble? I didn't get it.
Oh,
You mentioned
Bloomberg.
Bloomberg.
Yeah, Bloomberg. Yeah, you can use
Okay,
Bloomberg.
we
Yeah, you
can
can.
follow Twitter, right?
Sorry?
Can we follow them on Twitter, or it's just a website on its own?
Yeah, you can go to bloomberg.com. You can use forexfactory.com. You can, yeah, there are several forexfactory.com, bloomberg.com. Yeah.
Yes, you can also follow
Bloomberg.
them on Twitter as well. Yeah, Bloomberg.
Yeah, they also
You
have
can also
pages
follow them on
that you
Twitter.
can
Okay.
follow. But I think you get more news from their site.
Okay.
Mm.
Okay.
You get
Okay.
more
No,
news
sir.
from their
Thank you
site.
very much.
Yeah.
Okay.
Awesome.
Thank you.
Awesome. Yeah, Victor, the reward is something you'll be claiming. So we'll be making that available after everyone has signed their attendance. So from 7 p.m. tomorrow, if you go back to your tax page, you should be able to see that the task that you carried out under the completed section. And then from there, you can claim your points and then your AI units as well. There are two things you'll be getting. You'll be getting points, which can become our native token much later. And then also AI units, which can allow you to trade on Candleweb. So thank you, everyone,
So yeah,
for
sorry
showing
guys,
up.
Ramachan. Let me give her like 5 more sites you can actually use. She can use, I'm sure she's writing it down. She's here and she's listening to me, right?
Isaac Everest, I think what you can do, right, so that it
All
wouldn't be
right.
just for Ramachan, if you can share
Okay.
those links on our Telegram. Yeah, just reference the question that Ramachan asked and then share those links on our Telegram so that anyone and everyone can be able to have access to them. And then I think
Oh,
we can also share it on the WhatsApp as well. And then, guys, if you're not on the Telegram group, join the Telegram group. The WhatsApp will be muted most times because it's more personal for persons, for people, and we don't want to flood them, flood their inboxes and all of that. So, but the Telegram community is always open, so you can always see content there. We always share latest news around crypto and all that stuff there. So yeah, if you're not on the group, be sure to join. So thank you everyone for tuning in to today's lecture. In case you don't know where the Telegram link is, we just shared it here. And then if you also go to our website and go and scroll down to where we have socials, the bottom of the website, you're going to see our Telegram and other socials there. So be sure to follow us so you can always get latest information about what we're doing, courses we're offering, and all of those. So thank you everyone for tuning in for today's lectures. Please, can you guys react? If you enjoyed today's course, can you just react so that we'll know you enjoyed today's course? And also do give us a like on Twitter as well, so you can react here so we can know that you enjoyed today's lecture. Thank you so much everyone for tuning in.
Thank you so much for the class, Mr. Everest. The class was amazing.
yeah.
Thank you to everybody.
Well, thank you everyone.
And
Appreciate you guys. Thanks. Have a good night.
have a good night, everyone. Stay safe.
Awesome.
Joseph said I'm carrying a lead.
Hopefully hopefully Joseph, Amaka will not leave. Hopefully.
Don't blow your account, Shao.
No, Candleweb won't allow Amaka leave.
Exactly.
Awesome. All right, guys. Good night, everyone.
Yeah, good
Yeah, good
night,
night, guys.
everyone. Stay safe.
Mhm.